Hey everybody, this is Ray Halstead and Patricia Nass with REH CPA. Today we want to talk about the 7 most common mistakes that small business owners make. I've got Patty here with me. Patty, what can you tell us? What are the 7 most common things you see that small business owners do?
So the first one is not filing or late filing a tax return. Sometimes people don't realize what type of entity they are. They don't understand what needs to be filed and the filing deadlines. If you're an S Corp or a partnership and you're late on that, there's pretty significant penalties. So that's definitely the top concern is really just not knowing what you are and when the filing due dates are.
And some people, if there was no activity in the entity, they think they don't have to file, and that's not true.
Correct. Yeah, especially an S Corp, doesn't even matter what you're doing in it. You always have to file a return.
Yeah, because sometimes people will get these entities and not do anything with it for like the first year or two and think they don't have to file. No, that's not true. You have to file.
So then the second one is now not paying estimated taxes. So a lot of people, just aren't familiar. You're starting a new business or something like that. You don't realize that, you should be paying estimated taxes based on your net income. So now if you're paying those late, there's potential penalties for paying them late as well. Again, just something that most people don't think about. They're so focused on their business. They're not really focused on the tax aspect.
Right. It's really bad because then if you don't, and then you have a large balance due, not only do you have that balance due, but then you've got the estimated tax payments for that current year. So It makes it even worse.
The next one is not paying self-employment taxes. So what I mean by that is that, under certain structures are how you have to pay yourself to make sure that you're capturing self-employment taxes. So if you're an S Corp, then you need to be paying yourself a reasonable wage. And those self-employment taxes, the FICA taxes that you're running through payroll. So S Corp owners required to pay themselves through payroll. That covers their self-employment tax. Now, if they're a partnership, they also have self-employment taxes. So they need to be making sure that they're not putting down that they're passive in an activity, that they're actively in that trade or business, and that, that they're capturing those self-employment taxes when they go to file their returns.
Right. We have a lot of small business owners that they're really trying to avoid having to pay the self-employment tax, the FICA taxes, but there's a balance there for sure because you're paying in for your Social Security, and if you don't pay in, then you're not going to get Social Security.
Right, you go to retire.
A lot of people say, well, it's not going to be there anyways, but I don't think that's going to be true. So you definitely want to participate in Social Security, and the only way that you're going to be able to do that is to pay either self-employment tax or FICA.
The next one, talking about payroll, is misclassifying people as employees or independent contractors. A lot of businesses say, hey, you're an independent contractor. I'm going to pay you on a 1099 because it's easier for them. They don't have to worry about payroll. They don't have to worry about, withholding the FICA taxes. But the problem there is that the IRS says if they're a true employee, you need to be paying them as an employee.
There's rules. Yeah. There's rules. It's funny because I'll even get people, they'll even ask me, they'll say, which one should I do? Should I be an employee or should I be a 1099? I'm like, it's not a choice.
Right.
It's not a choice.
If the business has control over when you're working, where you're working, when you're showing up, what you're doing, then you're an employee. If you work for a bunch of people and you're just being paid for a job that's being done or, sporadic jobs that are being done and you have a risk there, you have a risk to lose on your own business, then okay, you are an independent employee, an independent contractor there. Yeah. But when somebody says to you every day, okay, you need to show up this day through this day from this time to this time, and I'm going to review your performance to keep your job.
Or W-2.
And then with that, the next common mistake is not paying the payroll taxes. So, when you're running payroll, you have withholdings that you're doing from people's paychecks. If you're paying them a certain amount of wage, you're withholding the Social Security, the Medicare for the employer portion, you're withholding their federal withholdings and state withholdings. All those need to be remitted. If you're not remitting them timely, you're just going to build up penalties and interest. And those penalties are pretty severe.
Yeah.
Because it's not your money.
Oh, yeah. Let me tell you, you want the IRS's attention, don't pay your payroll taxes because they truly come after you for that. That's a big deal.
Yep. And then the next one is poor record keeping. So if you're not keeping your books clean, if you're not, how are you really going to know what your net income is? You're not. If you're not keeping track of all your income and expenses, you're potentially not going to be reporting it correctly either. Anytime you report on your taxes, they need to know the gross amount of sales. So if you're putting in wrong numbers there because you're not keeping track, if you're getting cash and not really depositing it in bank accounts or paying attention to it, there's no way that you can truly keep track of what's going on. And again, if you get audited and your records are terrible, that just creates a whole nother story of issues there. And then lastly, along with the record keeping, another big problem is commingling personal and business activity. So
that's probably one of the biggest ones I see. Probably one of the most common ones I see is that one.
Yeah.
People don't understand.
Yeah. Once you start paying personal things out of your business account, once you start, if you're not keeping track of those expenses, and really that commingling opens your business up to potential issues in the future. If you're paying your mortgage out of your business for your personal home and something happens to your business, well then, are they going to say, does your business own your home or do you own your home?
Yeah, it just causes a lot of problems whenever you start commingling funds between business and personal. A lot of people go get these LLCs and these corporations to shield themselves from, the IRS or from lawsuits. But what they don't understand is whenever you start commingling, you potentially lose that protection. So, yeah, that's probably one of the biggest problems that I see.
Yeah. So, those are pretty much the most common mistakes that happen.
Yeah. Well, if you're a small business owner and these 7 common mistakes sound familiar and you'd like to figure out a way to correct those, give us a call and we will help you out with that. Thank you.